Hello, very good afternoon, ladies and gentlemen. Welcome once again to the third session of AREEM. AREEM is a joint work of NTPC School of Business and Power and Sun from Middle East. It is dedicated to build a capacity in the industry. It is connected in Southeast Asia, Middle East, and Africa. We are also extending this into now in various countries in Europe. Today's session is on ESG. It's a very interesting subject. Growing up these days, you have been coming across, Chief Sustainable Officer, which is a new designation the industry has created, and that's what we are going to discuss with the experts. What is the importance of ESG reports? What are the nuances which ESG report has? What are the challenges? What are the prospects and future of this? How quickly various or different industries are picking up the subjects? Why it is required? And we have an excellent panelist and experts today's session. Starting up with our keynote speaker, Dr. Rajeshwari. More than 30 years of experience in training. She's the director of NTPC School of Business. Andrew Troll, a scholar from Harvard and FDP of IIM Ahmedabad. She is, I think, crossed 100,000 plus training sessions internationally and nationally. Then we have Prachi Khanna ji. She is from a Boston consulting, more than 15 years of experience. Mr. Manish Kumar from ICICI Bank, I think 25 years plus of experience. Then we have Professor Gopi, 30 years plus. So I can very proudly say that this panel and experts together, including me, who also carries 30 years in the industry, we are more than 150 years of a hardcore industrial expertise, from banking, from academics, from consulting, from the industry direct. So let's take advantage of this and go through next 1.5 hours, which we will be spending going deep diving in some very important actually subjects which are of great requirement for the current actually market. Without discussing further on the subject, I'll leave the session to the experts and invite Dr. Rajeshwari for his keynotes for the session. Dr. Rajeshwari, for you.
Well, good afternoon, everyone. This is such a proud privilege to be a part of the galaxy of the eminent speakers. I feel very dwarfed because I see who's who sitting here in this panel of AREEM and NTPC School of Business international webinar on a very, very important aspect, that is ESG reporting, its nuances, its challenges, disclosures, and whatnot about it. Very, very happy that AREEM NSB cooperation has led some meaningful contribution in sharing the wisdom to the relevant people who are into the sphere of energy, power generation, power transmission, or distribution, or somewhere related with sustainable development of nation, or net zero programs, or say that the global challenges that each of the citizen of this universe is facing, that how can we be better, greener, cleaner, environment oriented people. Hence, and when we were talking, like me and Lokesh ji from Power and Sun, when we were discussing about what should be the next topic about when we take up, then we came to know that there are industries who say that while we are doing ESG reporting, not many things are clear. When we prepare certain things, we still feel that there is a lot to be done, and there is a huge data on which you need to work on. And also there are challenges that whether we have a set standard template that we follow, or we follow a global standard, or should I as a company or a corporate, do I have my own template? And would it fit? The one thing would fit in one size, will it fit all those challenges were being felt. And hence we decided that we would talk to the people, those who are into ESG reporting in big way. And that's how we hit these wonderful gems of the ESG championship. Manish Kumarji from ICICI, Sunila from Bayers, and Prachi from Boston Consulting, and our own Professor Gopi, who is into a lot of things, into the environment scientist he is, and the way he has led so many initiative at the global level. I thought all of these, and LK Verma ji coming from the industry background, where he is at the helm of affair as a chairman of one big solar company. So how these, we all, academics, research, practitioners, the benchmark setters, can we all come together and can do something for the knowledge sharing? That was a basic idea. Well, when I talk about the each of the elements, I would just give a very brief, because I know I respect the time. So in 2 to 3 minutes, I'll sum it up, that when it comes to climate or environment management, it needs both, as Professor Gopi would agree, that mitigation as well as adaptation would be a challenge for the climate change policies. Uh, then, if I come to the social, I have always led large projects with the bottom of pyramid, because I have always believed that government policy, corporate policy, big schemes, big incentives do not work if the public or the masses do not get connected with the cause. So here is one thing, that the impact can come only when I decide. The inner drive has to come. As I say, an egg broken from outside, a life is lost, and an egg broken by itself, as life is born. So here the concept is to make the life is born, because that the inner drive has to come. You cannot force anything on anyone, but still we are forcing, because we know that the time has come that we are sitting on a time bomb, we are sitting on a mountain hill, where huge issues would be faced by our younger generations to come. And there comes the governance issues, that how, which model would work, where we all would drive it consciously, that everybody feels the responsibility, everybody feels the conscious effort, and everybody marches towards it with 100% commitment to it. We say that remove plastic, but how many of us are able to do it? We say that save water, but how many of us are able to do it? So the inner conscious, the 100% commitment, I am there, I am a green warrior, I am a champion of the cause, that we have to wear it on the sleeve. That is where I end my small, glance of the subject through, because I don't want to come in between the pearls of wisdom being shared by such eminent galaxy of speakers. Over to you, Lokesh ji.
Thanks, madam, for your nice words. I think you have touched almost all the parts of the ESG, why it is required, what it is going to deliver, how it is going to deliver. Thanks a lot, once again. Now, I would like to request I would like to request Neela ji for her quick views uh, on the subject and her experience to
Lokesh
share
ji,
with
sorry
us.
to interrupt. For the sake of audience, I would like to tell that all these eminent people would be speaking their mind for 5 to 7 minutes as a presentation, and then the question answer rounds would be there. If any one of you have question and answers, please do use the Q&A box or the chat box. We'll be taking it up.
So, good to see that the QA sessions has already started. Okay, Sunila ji, up to you. Yeah, so she
Sure.
comes from industry experience. She heads the ESG, from a Biocon. Biocon is a well-known industrial giant from the Bangalore as a headquarters. She has been spending almost 2 decades in environment, social governance, strategies, visions. So we invite her now to share her views and experience with us with the session.
Yeah, thank you so much. Thank you, Lokeshi. And I thank AREEM to give me this opportunity for sharing my thoughts here. Is my screen visible?
Yes, it's visible.
It is.
Great. So a very warm welcome to all the participants, those who are attending this session virtually. I am Sunila Sahasrabudhe and I have 22 years of experience, and currently I am heading ESG for Biocon. And I'm happy to share I have contributed for 2 of our national projects in India. I was the environment specialist for the Mumbai Metro Line 3, out of which the phase 1 is already commissioned, and also for the Atal Setu, that is the MTHL project, which has been inaugurated in January this year. With this short introduction, I'll move on the slides. Sometimes we get confused between what is sustainability and ESG, and a lot of people actually think they are synonyms. But I want to start here with saying that sustainability is actually a process where ESG is a contributor. And when I say that, there is a clear difference. ESG is nothing but it helps corporates to evaluate the performance on the 3 criterias and showcase the impact that the business is creating on the whole world. And ESG is nothing but it comprises of policies and procedures where a company is committed for responsible business practices, how an organization addresses the environmental challenges, manages the social responsibility, and maintains ethical governance. Now, we would just like to see how ESG has been decoded. So since E, S, and G are the strong pillars of any business, the governance is again very important, which includes ethical business, a good governance structure in place, with board having a good diversity of independent and non-independent directors, a lot of transparency in the information being shared, and of course risk management is the base of the business because you're continually evolving and you're trying to see the risk involved in continuing to your business. Then of course change management is another important aspect of governance. When it comes to social aspects, the highest priority nowadays is given to the human rights and community relations, human capital, and focus on its development, work environment, work safety and environment of your employees, and the diversity, equity, and inclusion. Of course, environment, which all of us are every day facing here, is another big challenge. And climate change is one thing which all of us know is getting its prime importance. Biodiversity conservation, judicious use of water, air quality, waste management, and circular economy. Now, what is actually driving ESG? If you can see here, ESG drivers are clearly the climate change scenario in today's world, the regulatory landscape, the mandatory disclosures, the investors' pressure, the customers' demand, the ESG rating and score providers, the ESG standards and frameworks, and the voluntary frameworks against which we are reporting. Now, how this entire thing gets, looped up? When the corporates are disclosing their ESG performance through disclosures annually, actually the rating agencies are trying to evaluate their performance and give a ESG score or a rate to each corporate, depending on the sector. And this is where, the investors come in big play, because investors are nowadays heavily dependent on the rating agencies that they are providing the rating to the corporates. And this is how the investment decision approach is also dependent. Now, I'm broadly going to share with you the different rating agencies that are there and how their difference in approach of giving the ESG rating and score is different, and why the corporates are actually struggling against the disclosures, because the information available in the public domain is same, but how each rating agency, because of the difference in weightage and difference in the approach towards the rating given, is varying. I'll briefly touch upon MSCI One, Sustainalytics, EcoVadis, S&P Global, CDP, FTSE Russell, and ISS. Now, if you look at MSCI, basically there is a difference in weightage. If you can clearly see at the top of the slide, MSCI gives 10% weightage to environment, 55 to social, and 35 to governance. And if you can see, there are 33 ESG key issues against which they are actually trying to evaluate a corporate. Now, if we look at the Sustainalytics approach, I think there is a major difference here because they approach and evaluate the ESG performance basis risk. And when I say that, there is a complete demarcation and they have their own model against which they run certain parameters and give a ESG risk score to each company. Now, for a company to get evaluated, there are these 19 aspects on the left-hand side of my slide, which is forming the basis for evaluation. And any industry should ideally always be in the low risk if you want to be the best performer in the sector. Now, these are the material issues which are aligned for the performance evaluation. And I'll be very happy to share all the rating agencies are actually making the United Nations principles and the United Nations Sustainability Development Goals as the primary key criteria for evaluation. Now, moving on to the next, if you can see here, again, there are 21 parameters in EcoVadis against which they are evaluating a company, but there is a difference here. They have added a sustainable procurement aspect, which is nothing, but nowadays there is a great emphasis on engaging with your suppliers across each business. And this is being done so that when a company is giving a commitment, ultimately they are dependent on the value chain partners upstream and downstream. And when we do that, when you give a commitment, you are actually making sure that the whole chain of your business is getting covered. This is just to show that EcoVadis actually gives you a medal basis your performance, and there are platinum, gold, and silver and bronze medals that are announced depending on your score. Again, coming to S&P Global, you can again see the difference in the weightage being given. So here, environment dimension is given 14% weightage, 41% to governance and economic dimension, and 45% to social. This is where every year S&P Global keeps on maturing their rating tool and the framework depending on the difference in the business scenario. And I just want to highlight one thing here. Since I come from a pharma sector, I have taken that as an example. Otherwise, I will take you through CDP, where now CDP has actually aligned itself to the various disclosures and frameworks which are already existing. And if I take you here, these are the different sectors for which each of these rating agencies are providing ESG scores. And when it comes to CDP, they have highlighted environment to be the main criteria, and they cover up climate change, water, forest, biodiversity, and plastics. And there are 4 levels for evaluation: the disclosure, the awareness, the management, and the leadership. If you see, the CDP actually has level basis rating score, and they have bands against each. So if you are a leader, you will get an A. And if you are not giving a proper disclosure, and there are flaws in your disclosures against each of these sessions, definitely your score will go down. Now, coming on to FTSE Russell, you can see here again, they have given a core focus to ESG for the company, and they have aligned to the supply chain for the social aspects and for the environmental aspects. This is just to showcase again the number of themes and the pillars. There are 300 indicators against which each corporate is being evaluated when they do the evaluation. And moving on to the next one, here I just want to highlight, look at the difference. Now, this particular agency is giving more emphasis to the social and governance, and they have given 80% together, so there is no bifurcation, and 20% only to the environmental aspects. And when they do the evaluation, they are making sure that they are aligning their evaluation criteria to the basic principles and frameworks available. So you can see on the slide, this ESG rating methodology is aligned to United Nations Global Compact principles, the business and human rights principles, the fundamental convention of ILO, OECD, and of course to the EU Sustainable Finance Taxonomy, which is coming up very recently, and of course to the science-based targets. And you can see the band here. The rating is given on two basic criteria. There is a quantitative one, which is having a 25% weightage, and qualitative one, which is 75% weightage. These are again aligned to the SDG goals here. I will not stress more time here, but I directly want to come on to the challenges. And the major challenge which I personally feel from the corporate side is the difference in weightage, which I have been trying to highlight in last few minutes. And then the next is the variety of ESG frameworks across the globe in various geographies. Now, we fail to understand the industry sector could be same, but if the geography setting change, I think the comparison or the impact definitely has a change. And we are not still trying to understand this difference because of the geography, which plays a very, very important role when you're doing an impact assessment. Of course, the innovation and technology is happening in a very rapid manner, and there are a lot of tools and technologies available which are being used. And when I say that for ESG evaluation, there are a lot of AI-based tools which are being used, but ultimately the outcome which is coming out is not actually giving you the true picture. That's again a big challenge. And now, due to the overlap between the various frameworks, the corporates are actually struggling very hard. As Dr. Rajeshwari already highlighted, my information which is available, whether it is fitting the right thing in the right pillar and whether it is covering up all the aspects. The next interesting thing I want to highlight here is that by using these technology tools, we are trying to do an apple-to-apple comparison, but which is actually not a correct approach, because the moment your geography changes, the moment your sector is changing, I think the impact that a particular sector is creating on the overall environment or the society is very much different. So I'll conclude with this slide highlighting that ESG is a journey towards sustainability, and these are basic steps which should be followed, and is personally my recommendation that we should have policies and frameworks in place. We should align each business function to those policies, and we should set some goals and targets internally, keep on monitoring them, showcase the progress, then disclose it to the shareholders and the stakeholders, of course, and then the ESG rating agency plays a very important role here. The moment you have disclosures, they come ahead and rate you. Then look at those ratings very carefully, prepare an action plan, do the gap assessment, and keep on updating it, in your policies, and keep on aligning to the regulatory frameworks. So I think in whatever 5 to 7 minutes I have, I tried to cover it up. I thank you so much.
Thanks, madam. I think, the substance in your presentation was more than 70 minutes actually, and it will take time for us to absorb this and, come. So anyway, this is for the audience. The recording will also be available online. I know there was a lot of contents in this and we have run through, but it was important to touch all the connected subjects. Otherwise, we will be losing, important links. Now I would like to go to Mr. Manish Kumar. He is with the ICICI Bank. Last 25 years with ICICI itself, and I think around 30 years plus as an experience. Banking sector is very, very important, especially the finance in a ESG is also contributes to a larger, role. To Mr. Manishi.
Okay, thank you, Mr. Verma, and I thank the organizers, especially AREEM and NTPC School of Business, to have invited me to this panel. And my greetings to the audience to have joined from various parts of the world. Uh, I will take off from where my earlier panelist Sunila mentioned about the genesis of what we are discussing today and why it has grown in importance. So Genesis is all about the Sustainable Development Goals, which were specified by the UN, and basis that there have been actions being taken either in the finance sector or in other industrial sectors. So from the UN SDGs, the UN principles of responsible investing, UN principles of responsible banking, principles of responsible business conduct, they have all emanated over a period of time, and which has led to this movement called environmental, social, and governance. As part of this, while Sunila talked about the various individual parameters, how they are assessed, the importance which is attached to each of these parameters, the same thing applies to the disclosure and the reporting aspects of ESG. The question that will come to the mind, why disclosure and reporting? It is more about communicating, it is more about sharing, and it is more about enabling informed decision by various stakeholders, whether it is internal stakeholders like our employees, our value chain, or external stakeholders like regulators, investors. Investors could be equity investors, they could be bond holders. So they take an informed decision to get associated with an organization in whatever manner, to do business with that organization, to really understand what is the commitment of that organization to these important aspects of E, S, and G. Now, because there are audience from around the world, a lot of you might be familiar with some of the reporting requirements, acronyms that we come across, headlines that we read in the newspaper or as part of the literature that comes across our table. So some of the international reporting frameworks or the disclosure frameworks are the Global Reporting Initiative, which is the GRI framework, again completely emanated from the UN SDGs. They have parameters for each of the aspects which Sunila, briefly mentioned and talked about. There is the SASB, which is the Sustainability Accounting Standard Board. They extended it, primarily for the industrial sector on how the organizations can evaluate aspects of risk, and to some extent, how can that be really factored into the business operations? What are the opportunities that can be, factored into the business strategy? So that is all about SASB. Gradually, as we moved into climate, there were two important developments. One was the CDP disclosure framework, which, the full form is Climate Disclosure Policy. Now it is, of course, known as CDP. They actually came up with a framework enabling companies to disclose, primarily targeted for the investor segment, so that the investors could take their own assessment, could perform their own assessment based on climate, uh, biodiversity, water, and food parameters. Then, in 2017, the Task Force on Climate Related Financial Disclosures, this is more applicable to the financial sector. They came up with a framework around four pillars: governance, business strategy, risk management, and targets and metrics around ESG, more focused on climate. Uh, so these were the four important reporting frameworks basis which a lot of organizations have started reporting, have evolved their reporting, and a lot of this is being used by the external stakeholders. As far as India is concerned, right now there is only one mandatory reporting requirement, which is by the capital market regulator, the Securities and Exchange Board of India, SEBI. This reporting requirement is known as the Business Responsibility and Sustainability Report, BRSR. It it was stipulated from financial year 2023, which is the year ended March 31, 2023 in India, for the top 1,000 listed entities. It has, almost close to 150 parameters on environmental, social, and governance. So it encompasses the entire gambit of ESG. Mind you, this is a disclosure framework. So, unlike what my earlier panelists talked about, assessment and scoring, this is purely disclosure. So, there are no weightages here. The expectation is the organizations should report around these parameters depending on the nature of their business, to the extent it is applicable to them, uh, to encourage, the organizations to evolve and to mature in this journey, the BRSR has been divided into leadership indicators and essential indicators. So the expectation is that the essential indicators are the minimum reporting requirements, whereas leadership indicators are for organization which continue on this journey and consider themselves to have matured in this journey. So leadership indicators can be picked up as we go along in the journey. So this is broadly, the reporting frameworks which are being used in my mind in India and globally. As I mentioned, that the BRSR has about 150 parameters. So to facilitate that particular reporting, there is a specified format. Uh, there is a detailed guidance on definitions, what is expected to be reported, and there are also certain quantitative aspects. So therefore, how calculations need to be done, that is all specified as part of a guidance note. Now, within the BRSR, there are some parameters which are categorized as BRSR core, and these are subject to reasonable assurance, which is like an audit. The reason I'm talking about BRSR core is because my understanding is that a lot of audience, they are associated, with the energy sector, and therefore this BRSR core specifically becomes important. Uh, because the BRSR core includes details of the GHG footprint of an organization. And mind you, GHG footprint, encompasses a lot of gases. Carbon dioxide is one of them. The GHG footprint, the GHG footprint has to be broken down into what we call as scope 1 and scope 2 emissions. Scope 1 emissions are the direct emissions for the organization. This is basically the fuel consumption in the organization. For example, diesel used in as part of the process, production process, or diesel used in power generation units or backup units. It is emissions from the heating, cooling that the organization uses. It is emissions from, say, the car use in the organization, so owned cars of the organization. Then scope 2 emissions are the indirect emissions, which is primarily coming from the energy used in the operation. So this could be electricity, this could be heating, cooling, or source could be your own generation of electricity. So this is emissions emanating from these type of sources. So the BRSR core actually requires the organization to publish its GHG footprint, the intensity of the GHG footprint. The intensity is based on revenue. It could be based on the full-time employee equivalents, or it could be based on the unit of production. Again, depending on the nature of the industry, there is a flexibility of the company to adopt an approach. Uh, there is another parameter as part of the BRSR core, which requires the energy consumed to be reported based on the source of energy. So, as I mentioned, it could be fuel, it could be purchased electricity, it could be your own generation of electricity. Then there is a requirement to provide a breakup of this power consumption uh, based on sources. So it could be renewable sources, it could be non-renewable sources. So basically, the point that I'm trying to highlight is there is a very detailed reporting requirement as part of the business responsibility and sustainability report. Therefore, from an audience perspective, from ESG professional perspective, it becomes very important to understand the concepts of GHG, which is the global uh, gas emissions, the carbon accounting, the concepts of carbon accounting, the concepts of emission factors, the sources of information. So, what is the source of emission factors? What is how the carbon accounting needs to be done? So I believe this is a wide industry which is developing, not only from an organization perspective, but as I mentioned, because the BRSR core is subject to reasonable assurance, which is like an audit, there is also a requirement that the professionals get well versed uh, with these kind of concepts. Typically, in a company, these are taken care by the HSE department, which is the housekeeping, the safety and environment department, and therefore there are certain other parameters which I'll just like to mention here, which are also important as part of the BRSR core for this particular department. Consume the waste generation, which is categorized into by the types of the waste, aspects of circularity like the waste recovered, whether it is getting reused, recycled, and then finally what is disposed of and how it is disposed of. So the intention is to minimize the landfill, and it is required that the organizations resort to responsible mechanisms of disposal. So I will stop here. Probably, we can take up other points as we go along.
Thanks, Manishi. Very comprehensive, views and details which you have shared. Especially, I think in the next subsequent question answer session, we may need to go further in detail that what framework has to be chosen by what type of industry. So we have manufacturing, trading, we have the financial sides, we have service sectors. So what suits what type of framework, how it has to be disclosed. I think we'll go in little more details on the next session. Now I'll quickly move to actually Prachi ji, and she is 15 plus years of an experience. She has worked with the UN, government, private sector, corporate, basically working for so long on sustainability and ESG. And she will for sure would like to bring up another holistic view on the subject, from a Boston consulting side where she's working currently. Prachi ji, over to you.
Thank you. Am I audible, Manishi?
Yes.
All right, I'll just take a couple of minutes to put up my screen here. Is the screen visible? Is the screen visible? If you can please confirm.
Not yet, Prachi. Not yet.
Okay. Probably I'll stop sharing and maybe just voice over the context setting for the topic that I have at hand today. So first of all, good afternoon, everyone. Thank you for being a part of this event, and thank you to my co-panelists and the organizers for having me here. It's definitely a privilege to be a part of this esteemed panel. And we have heard Madam Sunila and Manisa speak about their experiences from the industry perspective. I come in from a slightly different table. I have been working in consulting for the past close to about 9 years. And before that, I have experience of working with the United Nations as well on the same topic of climate change and sustainability. And what I want to speak about today, and I'll be setting the context for the discussions as we go ahead, is on the accountability in ESG reporting. So essentially, if I were to set the context for this, I'd begin with how this all started generating, how the discussion and the orientation of ESG has evolved over the years. Looking back, if we see that the ESG journey began with initiatives like the Global Reporting Initiative back in 1997 and the UN Global Compact in 2000. So these were really some of the efforts to get some ground rules for how companies should think about environment and social responsibilities. Fast forward today, what we see is a vast ecosystem of standards and regulations, which Ma'am Sunila already presented to us today. So there are many frameworks and standards, and she just spoke about the international ones and the key ones. But what we also need to see is that there is also at a country level development of a lot of standards and regulations going on, and especially for a company that's operating across geographies, across jurisdictions, they are finding it very challenging to cope up with the vast reporting requirements and the different frameworks and all. So essentially, it may be just one set of data, but has to be reported across different formats, different to meet different definitions and requirements of the thing. And essentially, so right now where we stand today, we have evolved further from ESG being a very niche department within the organizations to ESG being really embedded in the corporate strategy, and now having more to do with the reporting and the compliance aspect of corporate planning. We do see in India itself, we have the BRSR, as Manish sir, briefed us about. And as he briefly mentioned that for the core parameters, the key requirement is to get it reasonably assured. Which means that you're reporting something to the government, to the regulator, and also are having to get that assured to a reasonable level. And that doesn't stop there. In the present year onwards, what we'll have to do is to also report those parameters for the supply chain of the organization, the value chain of the organization, both upstream and downstream, which makes it a Herculean task because the value chains typically in Indian context are very huge and very wide, so to say. So all of these are challenges. And similarly, and it's not that this is happening in India in isolation as well. When we look at what's happening in EU with the EU Corporate Sustainability Reporting Directive, the TCFD is being adopted by different countries as the reporting requirement on climate change to go ahead with. So we see examples of Singapore, Australia, Hong Kong, which have mandated that organizations do report on their climate change risk and strategies and how they will be managing that. In some jurisdictions, they are already under the purview of being assured. In some countries, they've given an extended timeline to start getting into the assurance mode as well. So when we look at this timeline, it tells us a story. It's a story of how the voluntary frameworks have transitioned over time, and which is driving the need for greater accountability across the board. And that is the theme that we would like to discuss today. So why is accountability so important at the end of the day? The truth is that without accountability, ESG reporting loses its power. We have reached a stage where stakeholders, be it investors, regulators, employees, they expect transparency, they expect accuracy, and most importantly, they expect credibility in whatever information the companies are disclosing to them. They want to know whether the ESG claims that are being made in the reports of the corporate, are they real? Are they verifiable? And whatever promises the companies are making, would they be able to keep up to that? Do they have the necessary systems and procedures, the financial allocation to be able to meet their declared targets? And therefore, accountability ensures that a company tells a story which matches the reality on ground, and which is also related to preventing.
Prachi, can you switch on your video because you're not visible?
My
Yeah.
video is actually switched on. I'm not sure why it's not
Yeah,
visible.
it was. Yeah.
Yeah.
It's okay. It's okay. Continue, please continue. Sorry.
I'm so sorry. I think it's a technical issue.
Oh, no, now it's okay. Now we can see you.
Okay. Thank you so much.
Thank you.
Right. So I'll continue from where I left off. So just speaking on why accountability is so important. So first thing, as we just discussed, because it's becoming a regulatory requirement, companies are reporting something to regulators. It has to be done with much more seriousness, much more backing of anything reported with documented information within the organization, having gone through the quality control procedures and testing. That's very important. The second thing is about, which is the softer part, but yes, perhaps the most material part, which is building and maintaining trust with our stakeholders. We are living in a world today that where information spreads faster than anything else, and it is at a pace which we have never seen before. So therefore, we are expecting that whatever information we are giving out, that if somebody is able to, somebody requires to know more information about that topic, there should be a corporate plan backing up that information, which then leads to building of corporate trust with the stakeholders as well. Accountability, as I said, this is what gives ESG reporting its meaning. The third important thing that I want to talk about, which I think makes accountability very, very important, is because we have evolved as a sector or as a thematic area across corporate. So it's not just about reporting, it's not just about doing things in patches. ESG is now very much a part of the corporate strategy. Business decisions are being made considering ESG performance into account. Investment decisions are being made like that. Therefore, for a company to be able to form a strategy, the baselining has to be correct. If we don't know how we are performing, if the data is correct or not, the strategy will not be effective. Once the strategy is there, the next step is to then track progress over time. So if we are not investing in having accountability in the systems and the procedures, how is the company going to track whether the investments made, whether they are adding value to the corporate engagement or not? So typically these three, both all regulatory, the stakeholders, as well as the internal requirement, they all make it imperative that accountability is spread across the board within the ranks and files of the organization, from the person who's recording the data to the person who is finally processing it to the person who's reporting it to the regulator. We need to have this across the board. So as we engage today in this panel discussion, I would really appreciate if, when we close this discussion, we're able to critically think about how ESG reporting can be made more accountable, more credible, and more meaningful. And also, while this is happening, we also want to ensure that how do we see ESG reporting not as a regulatory burden, but something that can be used as a tool for positive change within the organization, and how organization can influence a positive change outside its boundary as well. So with that, I'd like to close and hand over back to you, Varmaji, to take this ahead. Thank you so much.
Thanks a lot, for your views. I think one very important point that ESG reporting, accountability, of course, but reporting as such, is it becoming mandatory as we go with time? Maybe tomorrow the banks may start asking that please submit your ESG report, then only the banking solutions or the financial solutions can be extended. So this is for sure a subject of interest and importance. Let's move to Professor Gopi Chandran. He is with NTPC School of Business, 35 years plus of experience. We would like to hear from him more. Please quickly brief yourself and answer your views as well.
Great. What a joy it was listening to all of you. I have a prayer on behalf of the school. Please come to the school and help us work closer with you. We are probably in the hands of one of the most credible leadership, and therefore that is at the core. That is, credible leadership is at the core of engagement, and therefore please, I will in fact make a presentation which will touch upon the aspects our speakers have spoken, but will substantiate them further. For instance, Prachi mentioned about accountability. Professor Rajeshwari mentioned about people engagement, the diversity in reporting and evaluation templates, and what is the financial sector doing. Yeah, I will therefore argue with respect to, I'll make my presentation. I hope you're able to see my slides. Yeah, is it visible?
Yes, sir.
Yeah, great. What Prachi said just now was about how can we integrate the ESG criteria? And if we do it, Lokesh, companies around the world must very clearly answer the three questions that have been stated there. How much will they incur on sustainability related infrastructure? Have they actually brought down emissions? And how do we quantify the returns on investments? These are three specific questions that are being asked. And why are they being asked? The most recent, in fact, Sunila, you must organize a presentation from the school on the interface of biotechnology, ecosystem services, and the genetic, if I can use the word, variability of ecosystems. And that is with respect to a very important takeaway for institution like Sunila's, is the Kunming Montreal Protocol. the Kunming-Montreal Protocol that came into existence in 2022. It is the most recent development, and this speaks of integrated mitigation and adaptation. The Kunming-Montreal Protocol. The second important aspect is the growing evidence, body of evidence about the impacts of climate change at the macro level and at the micro level. So we nowadays speak of, Lokesh, things like microcosms. We are not only speaking of the globe as a whole, but impacts within microcosms. The third important question we are asking is all this real zero or is it only net zero? So we have gone beyond net zero. Manish, you might like to take note of an interesting development that the IPCC has not yet acknowledged, if I can, for want of another word, say, and that is scope 4 emissions. We have gone beyond scope 1, 2, 3 into scope 4 emissions. And therefore, if this is the kind of a setting against which we are discussing, and I promise you, I'll stop within the time you have asked me to. Professor Rajeshwari spoke about people engagement. Professor Rajeshwari spoke about people engagement. One of the most profound things that have happened, even within our own country, is based on what the Honorable Supreme Court did on the 21st of March this year. And what did the Supreme Court say? It expanded the scope of Article 21 and Article 14 and said, please, environmental impacts will certainly consider climate impacts also. Please. And this is to enhance accountability by industry. Whether it is small, medium, or large, it doesn't matter. This is a recent development. And this is aligned with what courts around the world have also said. I've given you the example of what the European court has said and what the Dutch court is also doing. And why should we do that? There is a whole typology of cases that are related to climate change. And these have got enormous implications for ESG related investing. I will not read off from the slide, but then it's important to know that this entire typology is not only about mitigation, it is also about adaptation. Equally important is about what you see as item number 2, it is about damages litigation. These have enormous implications for reputational risks of companies. Billions of dollars are spent on tackling reputation risk, and that therefore is a call. Prachi, Sunila, Manish, and Professor Rajeshwari referred to this second typology, and that is research agenda number 2. And what is research agenda number 1? How do we therefore create a basket of tools and techniques to empower stakeholders, so all can work in concert? AREEM might like to take this as a very important set of recommendations for the work further, research agenda number 1. And what is the research agenda number 2? We are not able to characterize 1, 2, 3, 4, 5, 6 kinds of green issues. It's either green crowding, lighting, blame, labeling, rinsing, or hushing. This is a huge challenge. And an excellent overview of all of these. Incidentally, I hope our panelists will agree with me. The origins of ESG was way back in the early 1920s, when South Africa witnessed people affected walking up to industry and saying, why don't you also share a part of your profits to raise consciousness within the society, to bring greater equity and justice? And therefore, please, we should not trivialize ESG. We should do everything. And the second research agenda would be, therefore, to help companies characterize these 6 kinds of green issues. That is a lovely interactive platform. It's called Eyes on the Earth by NASA. It will be wonderful if each of you open this and look at the interactive platform NASA provides. Moment-to-moment information on the changes in the environmental profiles of the globe are evident And why do we have to know these, my dears? AREEM might like to please mark an interesting expression. It's called agnotology. Agnotology. Agnotology, the author says, is the process of making and unmaking ignorance. The process of making and unmaking ignorance.
Ignorance, okay.
Companies which are involved in this green hushing or green da 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 are all implicated in not revealing the entire picture. And that is at the core of accountability. Scientific evidences are growing, therefore, to categorically show that if we do not take action today, we know what the problem could be. And what did the Niti Aayog in our country do? It said, don't be worried about too much action to start with. And therefore, they gave 4 kinds of scenarios for efforts: least effort, determined effort, aggressive effort, and heroic effort. Can you expect any higher level of hand holding that can come from a centrally facilitating institution to be able to help people know what could be the levels of action? I don't think we should be asking for anything more. What about planetary boundaries? We know we have crossed 7 out of 9 planetary boundaries. Please, this is state-of-art information, which is built on 2 interesting principles: the law of limiting factors and the law of maximum tolerance. One most important takeaway for participants here in the program is, do not trivialize science. Please accept scientific evidences and base your action on integrated mitigation adaptation actions. What is agenda number 4? There is a lot of challenge, a lot of, if I can say, use the word haze. There is a discrepancy in the authority with which we are able to exert ourselves. And the call for action, especially for climate scientists, is please exert your authority ever more in public discourse. The planetary boundaries is state-of-art consideration. Sunila, one of the most important aspects of science and technology is what is called moral unneutrality of science. Please mark this. It will help you a lot. It's called moral unneutrality of science. Science is never neutral. Science categorically says, adopt a path for modifying your genes. You will not be able to answer questions like the sustainability of those transformations. Do we know enough about elasticity of genes, variability of genes and their expressions beyond several generations? The answer is a big no. This is called moral unneutrality of science. It applies equally importantly for exploitation of resources on which we have no rights. This takes us to an interesting aspect that AREEM might like to remember from this action point number 4. Please remember, policy making is rarely evidence-based. Let's not get carried away by saying, I'm presenting evidences. Policy making is rarely evidence-based. But what really influences policy making? It is the credibility with which advocates act effectively. Am I seen as being truthful to my cause, or am I also part of the greenwashing? This is a very, very important question to ask. And that is about number 4. How do you like this cartoon? Read this cartoon. Please remember, nature will not tolerate overexploitation. Challenge me if I'm wrong. And this takes us to an interesting dilemma, which is about the split ladder, as it's called. You know, you see those rungs, but they're part of a split ladder. One arm of the ladder going right and the other going left. And this is a very, very important consideration insofar as bringing stakeholders are concerned. And that takes us to something that has happened over the last 100 years. Over the last 100 years. The state responsibility in international law was discussed right from 1924. We are in 2024. But if you look at the history of science, technology, 100 years is a very, very short period of time. We have progressed enormously. And therefore, a platform like AREEM should be able to build on the momentum that has been created and not just leapfrog. As Vikram Sarabhai said, we should be able to pole vault. We should be able to pole vault into higher levels of coming together. Manish is familiar with what the UN Sustainable Stock Exchange Initiative does. He is also familiar with the Financial Institutions Initiative. Manish, and you also know what is the Equator Principle and what are the stock exchanges around the world doing to be able to bring this level of accountability. And that takes us to something extremely important, which is research agenda number 5. Prachi, the fine layering of credibility is done with respect to dominance, richness, and scale, and with the assessment process for pluralism, breadth, and mode. One thing I'll not do is to read out from the slide, but to say that when reports come to you or when reports are being presented by firms, it's very important to employ this framework. And can we therefore see how we can help our stakeholders embed the elements of these framework? This is also equally true of 4 other elements. And I have fine-grained these, having taken them from a very, very important literature on multilateral environmental agreements, and that's 23 years ago. Manish, financial institutions will do a great job for themselves if they were to embed these finer parameters also. Sunila will agree that recently there has been a groundswell of transparency related frameworks, and I've listed 9 important ones. And that takes me to research agenda number 6. Please remember, even an institution like the United Nations Environment Program, and I was part of the Compliance Assistance Program initiatives, working very closely. A very important agenda is harmonization of development goals with environmental performance. Harmonization. And this harmony is being brought by aspects of trade and compliance. This therefore takes us to a very important question about ensuring level playing fields. Sunila raised an important question. What is the issue with geographies? Sunila, one important answer which Prachi will agree with me and Manish too is, for instance, the European Union geography emphasizes on a higher level of compliance compared to a few other geographies. And once that happens, the benchmarks go up, performance goes up, ESG related funding also goes to such domains. And therefore, that takes us to my other important aspect of stakeholder capitalism. I will discuss that subsequently when we get little more time. And that takes me to my final agenda about number 7. Please, for heaven's sake, when anybody was to present a technological solution or a financial solution or a governance solution, for heaven's sake, ask them what are the boundaries of the performance of those solutions. It's very important to very clearly state what are the limits of the solutions and what are the limitations of the solutions that are being proposed. And if we do not understand this, we will be caught in the spiral of underperformance. We have to ask this question importantly. I will not take your time on this because now this means AREEM has a very, very important agenda. Over the next 1 year, you could probably do a whole set of programs involving what are called white coat specialists. Who are white coat specialists? People who have actually practiced. One important thing insofar as governance is concerned is members of the board must also know about materiality and what will be the return on sustainability investment. They must also know about what are the emerging opportunities and what are the risks. AREEM should send a call out to firms saying that as part of your board, please have an ESG committee, which will also understand risk compensation. And Manish will agree there is something called the butterfly effect, which is about ESG related performance, and its impact on financial performance. I've taken 8 minutes and I stop at this.
You can quickly sum it up if you like in 1 minute or 2 minutes more.
I'll take only 45 seconds.
Please.
I've given, rather, we as a team, I will not say I am part of this lovely team. This presentation synthesizes the excellent inputs that were presented by the panelists. That is why I chose to speak last.
Thanks a lot.
There are 7 research agendas. There are 7 research agendas. And these research agendas have come in response to a felt need. Lokesh, if I were you, I will note down a very interesting acronym. And this acronym comes to you on behalf of the panelists.
Please.
The acronym is FAT Chief Minister. FATCM, Fat Chief Minister. F stands for fungibility, A for accountability, T for transparency, C for consistency, and M for measurements.
Excellent, excellent, sir.
I devised this acronym for the benefit of our students.
Excellent.
The essence of all of this is this 5. And the excellence of ESG will be the ability to integrate emerging templates, emerging platforms with these. But the bottom line is absolute credibility. Thank you.
Thanks a lot, Professor Gopi. I think we all were listening you. I mean, we don't have the words actually. There's so much of substance you are, so much of content you have given. Probably we might take, a simple and easy guys, leaving the experts. I don't know about the attendees, but at least I'll take 2 days to absorb all those things and then come up with my agenda, what we need to do next. So
that's
I think
another way of saying you spoke too much.
No. You did not spoke too much, but you spoke so well and so much that it is not easy to absorb in a short time of 8 to 10 minutes. That was the point. Now coming back here to our quick question answer session, I'll come to Manish ji. Importance and practical use, like industry-wise, whether it is a financial sector or it's a trading or it's a service or the manufacturing, what framework to be used, how to decide that what we need to do next. Quickly, I would like to hear from you.
So, while I mentioned initially that there are various reporting frameworks, basically the organization has to decide for itself. There is a lot of overlap in terms of these frameworks. The principles on which the reporting requirements are based, as I mentioned, they all emanate from the same source. Depending on the geography, depending of the nature of the activities of the organization, some of the parameters for reporting become more important for certain organizations. Therefore, they stress on that. Number 2, a lot of the reporting requirements are driven by the investors and other stakeholders. So, for example, if there is a regulator, like what Professor mentioned happening in Europe, there is an entire regulatory movement to ensure that there is appropriate disclosure, there is informed disclosure. And while India was the first country to come up with an assurance requirement around disclosure in the BRSR, Europe is now following suit. So as far as the reporting requirements are concerned, if we look at the BRSR also, as soon as it became mandatory, there was a publication by the NSE Academy. They did a mapping of the BRSR parameters with the global frameworks, which I talked about, the GRI, SASB, TCFD, and how the various parameters map to the various reporting requirements under those international frameworks. So in case somebody is interested, that is available on the website of NSE. They can look at it. the mapping is actually sector specific. So they have covered, I think, close to 40 sectors. And as I mentioned, therefore, it is for the organization to decide an appropriate, reporting framework. So the way it is happening in India, while a lot of companies which had international investors, they started reporting, as per the integrated reporting framework requirement. They gradually adopted the GRI framework, and now that BRSR has become mandatory, they are reporting as per BRSR, and now as part of their sustainability report or integrated report, they are actually doing a mapping and cross-referencing. So it is effectively meeting the requirement of the local jurisdiction as well as the international community. And that is the approach which I would suggest. There was also a similar question in the Q&A box, so I hope I have also responded to that.
Being an extension of the same question or answer which you have given, Prachi Khanna has spoken about accountability. Now, accountability within the organization, accountability within the sector, accountability of disclosing the information, accountability on taking the right approach or right template or right framework. So between all those subjects, very quickly, how do you define or how would you like to suggest that what are the key areas which has to be taken first, and then how we can set the priority in these different accountabilities?
See, again, ES and G have to be looked at together. We cannot really segregate it, saying that something is more important. As far as accountability is concerned, I think the organizations need to set up processes with regard to data capture. They have to be, SOPs. So it is quite similar to what we do in financial reporting. So what is the source of the data? Is the company comfortable using that source? What are the checks and balances which are available before the source is being utilized? How is that source being, or how is that data being reported? So what is the appropriateness as far as that reporting or use of that data is concerned? So as I mentioned, because of the assurance requirement which SEBI has stipulated, uh, a lot of these governance issues and accountability issues are getting addressed. So, and large organizations, in any case, these are all emanating from the listing and obligation requirements. So SEBI, already has a lot of governance regulation. So this is now getting gradually embedded as part of that as well.
Good. I think Dr. Rajeshwari has a question. She has raised a hand.
Yeah, so Manishji, would like to ask that, the honesty with which the disclosures are done. Like you gave the example of the car, how many cars or vehicles are being used. Then I can always show that there is no cars by me, but I'm using it by some other means, like how those kind of things can be fudged, and why is it like, why people are fearing that the disclosures, honest disclosure, would lead us into some problem.
So I would actually, look at it a little differently. Organizations are evolving, and as part of this process, they are also trying to understand. See, say for example, GHG protocol, which forms the basis for carbon accounting. Understanding of the GHG protocol itself is, taking some time. So while I understand that what is scope 1 emissions, but what are the sources of scope 1 emissions? That is something which has to be understood completely. And therefore, it may be possible that when I report, say, for car emissions, I would have today considered 100 cars, but the organization may have 120 cars. So as I mentioned, what is the source of the data becomes important. A lot of organizations, what I'm seeing in India, they are actually using their financial reporting because that forms a basis for a lot of data and information. And because financial reporting has evolved, and it already has an inbuilt, maker checker process, the 4I principle. A lot of a reporting on ESG can actually be based on that. So that is how we can kind of address the issue that you mentioned.
Thank you.
Yeah. I would like to go to, Prachi Khanna for the next question, which is similar question is also in a QA session there. Different regions or different countries, different policies, with different policies, different region, countries. How do you see the, involvement of ESG practices or becoming mandatory? What is the scope for it?
Right. So definitely, as we have been discussing as to that the push definitely is move away from the voluntary reporting, embed it into essentially give the same stature to non-financial reporting as we are having for the financial reporting as well, which means the regulators would like to have an equal amount of oversight on the non-financial parameters as well, and which also means that there is a lot to be done internally by the organizations in order to catch up to that expectations as well. So, if we were to draw a parallel between financial reporting and non-financial reporting and how the systems may or may not align with one another. If I can go back, say about until 5 years ago, there was little or no board level oversight on ESG issues previous to this. It's only after it's the investors starting taking interest in it, and then subsequently, of course, with now the BRS are coming in, we now have the board looking at ESG data and performance and parameters and seeing where we are. While we have progressed this far, I'd say there's still a lot of efforts that need to be made in terms of further building on that. For example, and Manish sir is here, and he would be having an oversight on what the RBI is planning to come up with in the coming years on reporting on the climate-related risks. Now, there are at present no guidelines on how companies are expected to report on such risks, and also how do we report risk with the likelihood. So the risk might be a very huge number, but then how do you contextualize it to the likelihood of that happening, and how and we obviously we are all in the business here. We don't want to give our shareholders an idea that the organization is working on a very risky proposition. So how do we articulate the messaging? What are the tools? What is the right way of doing that thing while still being compliant with the regulatory mandate? So that is something that we definitely think about, and therefore this is where the role of the board also comes in. The board needs to see whether we have the risk, whether the organization is having enough and stringent risk management procedures to be able to identify the risks that come ahead. So when we talk about regulations, reporting is just one part of it. Say tomorrow there's a regulation that says that a company cannot use X%, more than X% of its energy from coal, for example. That's also a risk that we are facing, and therefore from a banking perspective, I can say this becomes a business risk. From a manufacturing industry perspective, this becomes an operational risk, and we have to be prepared across that. And we also have to ensure that from the board level up till the operational and implementation level, this culture gets embedded. That's very important. So we'll talk about the board, we'll have the management tier, we'll also have the implementers. That's one part. The second thing, if I can say from the in terms of the scope of that happening, I'll take up particularly in terms of internal audits, how they are structured in the organizations. We have a very strong system of internally auditing our financial books, right? But we don't see that kind of effort being put into auditing or internal audits of non-financial data. So these are the things that we need to think about, because the regulator is not differentiating between the two kinds of data now, but the organizations are not prepared to catch up to that, which is what we have to work upon. So all the right points that Manish sir touched about, on the SOPs having there, on the maker checker being there. So these are more implementational things, but we also need to think from a 360-degree, 30,000 feet perspective. If the board is doing enough, if they're checking in on the financial parameters once a year at the annual reporting cycle, or are they doing it as a matter of monthly or quarterly meetings that they have. Similarly for the internal audit bit as well. So I think once we're in the right direction, but we need to embed this into the framework of how an organization functions to be able to actually say that yes, we have had the entire accountability across the value chain to be able to embed those mandates.
Excellent. A very quick question now I just leave this to all the panelists, and you can say simply in yes and no, or maybe one sentence to it. We have a different, if you go, across the industry, you have a large corporates, then you have a mid-sized companies, then you have a small-sized companies, then you have a macro companies, or, micro, level companies. So, across the system, what time frame, you think of it is becoming almost mandatory or close to mandatory. And I think corporates, it has already started. Mid-size, it is still not, maybe 1%, 2%, 3%, maybe 5%. So some numbers and, time frame. We'll take quickly views of all the, panelists, including Dr. Rajeshwari also. Manish, I start with you.
Okay. No, so I don't think it's a thing of the future. It's already here. And basically for the smaller organizations, it will be the larger organizations which will drive it, because the smaller organizations in some form or the other, are part of the value chain, either upstream or downstream. So it is upon the larger organizations to really handhold them, support them, because ultimately they will contribute to the larger organization's journey.
Professor Gopi.
Yeah, I second entirely what Manish said, without elaborating further. But please remember, courts are extending the long arm of law. When people are found to not submit appropriate and adequate data on the externalities, there are more than 2,500 cases around the world exclusively on climate change. There is a Sabin Center for Climate Change, which has got a record of all of this. My only request is kindly do not trivialize environment or climate action or this call for becoming more genuine.
Okay.
Thank you.
Yeah. I would just add that I'm talking it about a global perspective, not only for India. And when I say that, popular, I mean that at least 30, 40, 50% of the industries in that sector are adopting this. So keeping these two in mind, I'll go to Dr. Rajeshwari for your inputs quickly.
Yeah, Lokeshji, I think I agree to both my, Manishji as well as Gopiji. And I feel that, the uniformity at the global level is what going to, it cannot be like, as earlier also I said, one solution cannot fit all. And one, like, maybe I may be very naive in saying this thing, that what applies to a hotel industry or a tourism industry will not be applying to my mining industry or a manufacturing sector. And similarly, but each one of us, irrespective of whether we are into an industry or not, each human being is contributing to the, the adding on to the carbon emissions that we are doing every day. It is very difficult. We all have to pool up our energies. We have to show our commitments. Then only it is possible, is what I say. And timeline, unless everyone, as I said, unless everyone agrees their serious commitment, it is not going to work. Yeah, we may set policies, we may set codes to take a whip on the people, those who are the defaulters, but it may take some time.
Yeah. So quickly, I will take the answers from, Sunila and actually Prachi Khanna, and we are almost at 1.5 hours now. So maybe 10 minutes I need to extend to take some
No,
questions.
Sunila, I think Sunila has not spoken. Let her speak, please.
Yeah, so I'll just take it, Sunila, first, yes.
Yeah, thank you. Thank you so much for the opportunity. So my personal opinion is, and I agree with, Manishi here and Gopiji, that the time has already come. And he already touched upon the integration of value chain partners upstream and downstream. And trust me, corporates are taking a big initiative in educating and doing a hand-holding exercise. And I since come from a manufacturing sector, I can assure you that people have realized that unless we actually bring in our value chain partners into this journey, it is very difficult for us to give a commitment to the outside world, because it's not me who is giving a commitment. It's an integrated process. And if you look at the life cycle of a product, any product that we are manufacturing, or for that matter, any service that we are giving, I think your value chain partners are equally important, and each one is playing an important role. So, and when I say that, I also want to touch upon the accountability part. So trust me, industries are getting conscious. There are, disclosures coming up on, targets and goals from a company level. And for doing so, trust me, each business function is contributing. And the commitment is not only from the, the head of the department, but of course, the board is evaluating it. And since I come from Biocon, I'm very happy to share each quarter I present to the board the ESG journey of our company, and I'm happy to share that I at least get 1 hour. So, I mean, that's a good news to share with all of you. And of course, I'm sharing this because I think there is some hue and cry that, corporates are not playing a role, but trust me, all the corporates have become conscious. They have understood that unless we do an hand holding and we take our value chain partners, it is very difficult, one, to give a commitment, and two, to meet your own goals and targets. So I think it's a journey where, each one has to play the role. And of course, I mean, as human beings, each one has to stand committed and accountable for the role that we are playing.
Thanks.
Thank you. Yeah.
Yeah. Prachi Khanna ji, I think your last few.
Yes, thank you so much. So I think all of the co-panelists have covered a very key and very pertinent topic with respect to this very important question. I just like to perhaps restructure it a bit and add in my thoughts, my 2 cents on this. I guess we have spoken about how we need to help them do that. So definitely capacity building is definitely one of the activities that have to be taken up, and it's not something that is new. We have there most companies have a very stringent, very effective and robust supplier engagement program. It's just about shifting the agenda of the supplier management program slightly to ensure that they get capacitated on the ESG bit as well. And of course, we also have to acknowledge their constraints and the limitations within which they work. So expecting them to be full on ready with us from the first day itself to do that, it's not going to happen. We will have to be patient with them. We'll have to invest a lot in the value chain partners, especially those who are smaller entities, and help them grow as we go ahead. Very important to this context would also be shared learning. So when we are working for our corporate journey, and we have very experienced people here on the panel with us today, over the years we have imbibed a lot of knowledge, what works, what doesn't work, and I think all of that needs to be customized when we are delivering those training session or capacity building sessions to the SMEs that we have at hand. So that is going to be one small sense that I want to add. The second bit would be also in terms of, I totally acknowledge as a practitioner myself that the data gathering even in large corporates is a challenge as of today as well. It will be rather unfair to expect the same level of accuracy and accountability in smaller organizations as well, who do not necessarily want to invest in measuring equipments per se. Therefore, what we can do maybe as an organization, as a coalition, is to come up with certain kind of benchmarks for certain smaller players, which they can use based on their production data, which they will have access to in any case, and see if we can make that into a meaningful reporting program. And as the market evolves, as regulations evolve, as the costs come down, they will eventually get to the place where we are currently right now. The third bit will be on the differential treatment of different value chain partners. each value chain partner may not have the same kind of impact on environmental social parameters. There will be some topics which are material to them, but there will be some topics which are not material to them. And this is where, we can help them identify as to what they need to prioritize, what they can do with, say, second tier data, and what they can do with third tier data. This is where we'll bring our wealth of experience to help push their journey and make their journey a little easier, so to say, as we go about it. And then also, I believe the fourth and the concluding point is that what we need to be conscious about is that it should not just remain a reporting exercise, not just a one directional thing with the BS coming out that we ask them the data, they give us the data, and that's it. It can drive meaningful change. And also, if to look at, I mean, again, from a sector perspective, we have the representative from the manufacturing industry here, but there's also have the financial sector here with us today. And so to say, if I would say the value chain for the financial sector and where the material impact lies is very different. So for a manufacturing sector, the impact will be on the upstream, but for the financial sector, the impact on the downstream. And also in the kind of material value chain players, it's very different. For a manufacturing industry, the value chain players may not be at the same level of data recording and reporting on ESG, particularly the environment ones. But for the financials one, what we do expect the value chain partners in the downstream, who are the borrowers, they the large borrowers particularly, they have a very well established system of a decade or 2 decade old to collate data. So that is where the bi-directional thing will come in. So there are some players to which we can share our knowledge with. There is also something for the companies to learn from their value chain partners. And it's not just an equal one size fits all or one way fits all approach. And we have to be open and mindful when we engage with the value chain partners on that. So I guess these are the 4 points I wanted to make after all the wealth of knowledge that we shared today. Thank you very much.
Thanks a lot. I think it was I think Manishi wants to say quick words. Yes.
No, so I think I already spoke. I started with it, but just one more point. Sunila mentioned about it. The tone from the top, is important. They actually will drive this agenda within the organization, and therefore, if we look at any ESG roadmap, it starts with the materiality assessment, and that is where the management at various levels gets involved. There is a requirement to refresh the materiality assessment because the environment, both internal and external, keeps evolving and changing. Business strategies keep on changing. People keep on changing. So that is where I see the involvement. As Sunila also mentioned, she's presenting to the board on a quarterly basis. We are seeing that in the financial sector, the regulator, the Reserve Bank of India, and I'm kind of also alluding to what Prachi mentioned, the Reserve Bank of India has started taking a lot of interest. They are pushing the boards to really get themselves, aware and trained on aspects of ESG so that they can drive the agenda within the organization.
Excellent, sir. So I think we are around 6-7 minutes ahead of our time, 4:36. So I would like to, I think, thanks to first to all our panelists, experts of sparing their time for such a noble cause. And I think your words of wisdom is going to spread in different continents. It's not only for India. We have people from Middle East joining in various countries. We have people from Africa joining also. So there are a lot of other questions which is coming up. Some people have also put up their hands up for questions, but I think due to the time constraint, we will stop it here. Once again, thanks to all the attendees who have spared.
Lokeshji, I think if we can take those questions, we will put it up and then we can, send it back to those who have raised their, hands,
So
because we would have the data of the people, those who have registered.
So those questions are actually there in the record. We will they are written questions, and people can also reach us after the session, because the email and the links what is used for registration, you can also express your questions over there. But in general, I think it was an excellent session. Thanks to Professor Gopi, Dr. Rajeshwari, Sunila ji, Prachi, Manish ji. I think such a wealth of a knowledge and experience. In my opinion, it was such a wonderful session. You cannot have this type of session and this type of experts in one platform in 1 hour, giving you the essence of the last 20-25 years of their experience. So a great and a big thanks from all the audience organizers to the panelists. And Dr. Rajeshwari, you have been always a force, or the real person who drives all of us for this type of sessions. This is a third wonderful session, and I've been receiving so many requests now from a different countries and the people that we would like to now take a next session on green hydrogen or on a carbon credits or carbon tradings and all. So the requests keep on coming. Please join us again after a month, maybe sometime in November. We will release the date very soon. Thank you once again. Thanks a lot.